So hi everyone and welcome to today's podcast. My name is Carmen and this is Sean and Eva. And we are currently a student at University of Manchester majoring in accounting finance, and we also serving as the career resources division at BA Econ Society.
The objective of today's podcast is to explore the incredible journey of our guest, Ben Manser, who's shifted from wealth management and private banking to now co-founding a fintech company, and also to help you guys by providing insights into cryptocurrency for students with limited or no knowledge.
Exactly. So we'll be diving into topics such as like technological advancements in blockchains, the role of AI in crypto space, and getting Ben's invaluable advice for university students who are aspiring to make impacts in the rapidly changing industry. Thank you, Ben, so much for joining us today, and it's an absolute honor to have you here.
Yeah, thanks for having me. Pleasure to be here.
I will start the first question. So Ben, can you share your experience transitioning from like wealth management and private banking to the fintech and cryptocurrency industry, and what motivated you to make this change?
Yeah, absolutely. So my background has always been banking and financial services. So I worked for NatWest to start with and then transitioned across to Coutts Private Bank. My role within Coutts for the last, 6 years of my career there, I was head of operations for the international business. And a big part of that role was relocating the international headquarters for Coutts, which was previously based in Switzerland, and moving that over to Jersey. So a big part of my role was kind of setting up the systems and the platforms in Jersey and almost kind of building a new bank from the ground up. And it was a 4 or 5 year process where we put in all of the payment rails and all of the trading facilities, and I got to the end of that process, and I almost thought actually setting up a business seemed a little bit easier than I thought it might be, and it was kind of an inspiration for me to try and do it again, but do it for myself rather than for another company. So that was kind of one of the reasons that led me there. Part of the role was also in a previous role, I was a trader for the bank. And under my role as head of operations, I actually was responsible for the trading desk that executed all of the trades for customers of the bank. So if a customer wanted to buy or sell Google shares, they'd ring up the bank, they'd come through to my team, and we'd be the ones placing that trade for them. So trading has always kind of been integrated into what I do. And that was really kind of what gave me the background that led me to get involved in the crypto space. Obviously, there's a lot of trading. What our company is, it's called Algo, and we provide trading solutions for users that are interested in getting involved in cryptocurrencies. So we've got a platform called Arrow Algo, which is an automated trading software. So for users that are interested in building and backtesting and running automated trading strategies on cryptocurrencies, it's a no-code platform that essentially anybody could learn how to use. So what we're really trying to make algorithmic trading more accessible to a broader audience that may not previously have had access to it. So algorithmic trading is automated trading based on rules and logic. And previously, you'd have to be a software developer or a coder to be able to build these kind of trading strategies. So typically, it's only seen really by hedge funds, institutions, or coders with that real kind of knowledge. Whereas we've found a way to bring that to a broader audience and make it a bit more accessible to the average Joe on the streets. So yeah, I met my co-founder, a chap called Ali, probably about 18 months ago. We met through Y Combinator, which is an accelerator school. It's got a great co-founder matching service. If anybody's interested in getting involved in a startup or a tech startup, they've got a great matching service, which is where you write your CV and then you are literally swipe left and swipe left on other co-founders. And if you like the look of somebody's profile, you think it's someone you could work with, then you can match with them. So yeah, Ali and I met through that service. And Ali had already had the idea for this trading software, and he had a prototype that he was able to show me, and I took one look at it and I thought, this is fantastic. People would use this. I would use this if I was a customer looking for this kind of software. So yeah, it was a great match really from the start, and we've been live for about a year now.
Yeah. Then what is the hardest, like the toughest experience that you have when you are launching the software?
So I think one of the most challenging things that we've had was we tried to do it on a shoestring budget. So we were basically doing all of the work ourselves between a small number of people. A lot of companies, when they have an idea for a software, particularly in the tech space, that what they'll do is they'll raise money very early. They'll go out to seed investors and they'll say, we've got this idea for this product, give us some money and we'll do the research and put a proper business plan together. And then they'll go out for another round of more funding to develop the software. And kind of you go through these series of fundraisers, whereas we bootstrapped, which basically meant that kind of we paid for it ourselves and we kind of built it ourselves. So, if I was going to look back and try and start the process again, I might think differently about how we went about that initial decision-making process. But there are trade-offs. So one of the things that you would have to give up if you raised lots of money very early is that you might have to give up a lot of control in the company. As soon as you've got an investor on board, the investor might be trying to hold you accountable to certain deadlines or certain ways of operating. In some cases, some venture capital firms are very aggressive in the way that they manage their people that they've invested in, to the extent that I've heard stories about them appointing their own CEOs and companies and things. So, one of the things that was always quite important to us was that we wanted this to be our business and we wanted to keep control of it, which is the reason why we kind of decided to do it ourselves, as opposed to, raising the money from investors.
Yeah, it sounds very tough in launching the whole process, because you guys do the whole stuff by yourself. And I'm curious, how many people is in the team for the software launching?
So myself, my role is CEO. So I take a lot of care of a lot of the sales and marketing. I deal with a lot of the strategic partnerships that we have with other exchanges or other platforms. Do a lot of the customer engagement. You'll see probably that we'll share a link. I've got a YouTube channel and a TikTok channel where I will, as an independent influencer, give a lot of educational information about trading and about using the software. So that's kind of my role. We've got Ali, who is the Chief Technology Officer. He essentially is responsible for the coding and the development work behind the software, all the maintenance, all the upkeep, any new features that get built. Ali has 3 developers that work with him as well on that, on a contract basis. So there's 5 of us all together. Myself on the front end, Ali jumps in and helps me on the front end stuff, and he manages the build along with his 3 developers.
Then it can be considered a small team, right? In this case, like 3 developers and then Ali and then you yourself.
Yeah. So it's, there's different ways to launch different tech businesses in this sense. It depends really on the type of product in a lot of cases. So we've got a very technical product that takes a lot of development work to make sure that it's performing as you expect it to perform, that the strategies are working, that the calculations behind the scenes are all working for the indicators. It's quite an intensive, heavy on the development side and the technical side, whereas you might get some platforms that are quite simple and easy to build, but they take a lot more selling. They might be in a niche market, or they might need a lot more handholding for users. Not to say that our users don't need a handholding, but it depends what the focus of the business needs to be. Particularly if you've got investors involved, then they will expect to see a board appointed very early, a good diverse range of skill sets on the leadership team. So you kind of have to go broader with your recruitment at the start in terms of co-founders and kind of mapping out that journey, because that's what the investors want to see, where it's going to go and how it's going to grow, and the structure of the business, at each stage of the investment process, where it's going to get to.
Yeah.
Right. And obviously, with a small team and a limited budget, how do you guys ensure that you stay on top of industry developments or trends, whether it be new regulations, or obviously given that technology as a whole is so dynamic and rapidly changing? So what do you guys do to sort of stay on top of the newest trends, say, in the market?
So we are very fortunate in that we've got an advisory, a consultant, so who is actively working in the industry for a very prominent exchange. I won't name it, but he's very keyed and included into regulatory updates. Within my previous role at the bank, I had spent a lot of time dealing with regulators as well, dealing with kind of that side of the compliance aspect. So it's almost second nature to me as well to know where to look for this horizon scanning, which is why I think it's a good fit having me and Ali together. So Ali's got a really good track record of building and developing platforms for other startups as well. And I think he got to the point where he got tired of doing it for other people and decided he wanted to do it for himself instead. So himself with his software development background and myself with my financial services background, it was almost kind of a good fit in that sense to cover all the bases that we needed.
That makes sense. And also on the topic of development or innovation, what would you say is some of the key sort of AI trends or market trends that you see right now, like or something that our students or audience should be aware of?
Yeah, so one of the things that we've really embraced in terms of AI this year is the use of prompt development. A lot of our developers they won't write the code themselves. They will use AI bots to create the code. So they might copy and paste a chunk of our code base into a chatbot and say, this is performing like this. Actually, I want this to perform like this instead, and rewrite this code, and it will kind of rewrite the code for them. So we've been able to massively accelerate our development process by the use of AI in terms of using it to develop our code base, using it to speed up that code writing process. And that's a trend that I think you'll see a lot of companies following these days. Gone are the days where you're going to be writing a whole system or a whole platform from scratch and writing every single line of code yourself. So that's one particular trend from an AI point of view. I mean, AI generally, the businesses that are making the most use of AIs are the ones that are kind of working with it and using it to streamline their existing processes like that, rather than almost trying to reinvent the wheel for it.
Right. And obviously, given that, say, like as you're mentioning, it's a lot easier now with the use of AI to sort of create your own software and allows people the chance that without coding background to get into the industry. What sort of advice would you have to make for them to ensure, because of as more people come in, naturally there's more competition as well, or sort of new innovation. So what sort of advice would you have to developers that without that sort of coding background trying to break into the industry?
So the one thing that I would recommend is a lot of firms and a lot of businesses out there will hold open hackathons. So we actually run an internship within our business. So we've got a few interns that are working with us, trying to build some trading strategies, trying to help us create some profitable trading scenarios. And these guys, 2 or 3 of them have all been on some of these hackathons, and some of the ideas that the ways of working that come out they found really beneficial. So someone like Google or any well, it doesn't matter what industry, a lot of companies are now doing it nowadays, and they sort of hold these AI hackathons that anybody can apply to go and join, and they might give you 2 or 3 problems that they're encountering as a business, and kind of they're looking at how all the attendees can work together and maybe collaborate to come up with ideas. Obviously there's a incentive at the end of it, because some of them will get offered jobs. It's part of their application process in some of these firms. But yeah, these hackathons are happening all over the place. They're quite easy to track down if you do a Google search.
Okay.
Then, instead of in your opinion, instead of using AI in helping writing the code of the software, do you think AI could be used in doing the cryptocurrency trading?
Yeah, so I actually use it to build trading strategies. When you think about trading in general, one of the platforms that a lot of people know and use is called TradingView, which is a free chart-based platform out there. You can go and it's a website. You can go and look at kind of price charts and where they're moving. So we've got a partnership with TradingView. So anybody that uses our software would be using TradingView's charts within our software. They have the ability for anybody to create their own custom indicators. So trading indicator obviously is some sort of metric or calculation based on the price inputs that show different aspects of the market. So an example might be a moving average would be a trading indicator, a moving average of the price, or a relative strength index, which is a measure of strength in the market, average gains versus average losses. So these indicators are there in TradingView, but anybody can develop or input their own ones. The code base is available in there as well. So occasionally I will see, an obscure indicator on TradingView, and I'll copy and paste the source code from TradingView into ChatGPT and just ask it the question, how can I build this with it? How can I replicate this within our trading software? And so it's good in that sense. I mean, I use it a lot in terms of script writing as well for some of my YouTube videos that I do.
Yeah.
And for writing articles and our blog posts that go on the website as well. So there's lots of different ways to use it.
Yeah, we agree on that, because like AI, like ChatGPT, is really helpful in like for example, for us it's like university students, so we have to read a lot of like articles and stuff like that, and then AI like ChatGPT is really useful in summarizing things in just a few seconds.
Yeah,
And it
so
can save a lot of time.
some of the, in my experience, some of the schools and universities and things are getting slightly. I mean, it's always going to be very difficult to detect when somebody's using ChatGPT, and I'd never suggest just copying and pasting. But what I have seen is some clever ways in which it can be used in terms of, rather than just saying write this for me, you can ask it questions like, what should I be writing about? Or you can copy in a chunk of your writing and say, give me some counter arguments that I can write about next. Or, is there a different way of phrasing this? Or, you can use it as a virtual assistant to help your writing without having to copy and paste necessarily. So yeah, I've seen some really good results from people using it in that way.
Yeah, agree. But in my opinion, I think in somehow, for example, like ChatGPT, when it involves like mathematics question, it might not be that accurate in terms of like
so it can be.
numbers.
It depends on the inputs and the prompts that you give it. So I tend to find that it works well when you ask it the right questions. And sometimes I will use 2 or 3. So there's obviously Google's Gemini. There's another one called Claude, Anthropic, which as well. So sometimes if I'm struggling with one, I might try asking the same question on 2 or 3 and see how different responses I get, and whether I prefer kind of the output of one over the other. It's quite interesting sometimes to see the differences in the way that they respond.
Yeah.
I do have a question. What would you say are the potential risks or dangers of AI, and how are you going about mitigating this within your business?
Oh, good question. So what are the risks of AI? I don't think necessarily there is necessarily the bigger risk that everybody's worried about, that AI is suddenly going to take over and it's going to be an iRobot type scenario. So I think one of the biggest risks with AI is probably the risk of some of the biases and preconceptions that are within the AI itself. So if you don't have a well-trained AI model, I mean, one of the great examples that people like to give is, if you ask an AI chatbot to draw a clock, no matter what time you ask it, it will always give you the same time. It will give you a 10 past 2. And that's because the majority of images out there that the AI bots learn from are of marketing pictures of watches and clocks and things for the likes of Rolex or whatever watchmakers there are out there. And the most aesthetically pleasing position for the hands to be in for these advertisements is that kind of 10 past 2 V shape. So the AI bots will look at that, and they'll think, well, this is what a clock is, this is what a watch is. So interestingly, you can go and try it. Ask an AI to give you an image of a clock of any time, and they'll always give you the same response. But kind of extrapolating from that, when you think about things like gender biases, ethnicity biases, it's difficult to predict sometimes how, without the right training, without the right prompts, some of these bots are going to react in that sense. So yeah, certainly I think that's one of the risks that can be faced when you're using these types of models. How would we mitigate it within our business? So we're actively trying to build some AI chat functionality into part of our software. And one of the things that we're really having to do is train and test and see how many different iterations of things that we can ask out to do, and really kind of thoroughly analyze every answer it's given us. So the training element of the AI technology really kind of is key, and it can be certainly a time consuming task, and one that needs care and attention, because obviously if you're going to be very reliant on the technology, then if a mistake is made, then it can be fatal if you're overly reliant on it.
Okay, thank you so much for that insight. Because I know there was a law case, and I think they used AI and it got it wrong or something. So Yeah, I think it's interesting to see how like what mitigation strategies are in place to prevent this from occurring, but from like a trading perspective.
Yeah, so it's interestingly, we're also trying to use it to train a price prediction model. And so we feed in price data, we feed in indicator data, and we've kind of got this machine that's I won't go into the details, but it's spitting out price predictions for us essentially. And it's funny to see how over time it started off performing very poorly. However, as we've trained it more and more, it's kind of getting slightly more accurate at making predictions. And I think at the moment we've got it up to about 50% success rate. So yeah, as soon as we get it up to kind of 60, 70, then we'll start thinking about deploying it live, and yeah, hopefully sticking some money on it and making some money for our users.
So because like in one of your video talking about the US election on the cryptocurrency policy, so you talk about like the impact of like regulation change on crypto space, like the SEC approving the cryptocurrency EFTs, and also the BTC Act, or some changes in the regulator leadership. So how do you think this kind of factors would affect the industry in the future?
Yeah, so let me ask you a counter question. What do you know about cryptocurrency, about blockchain? What's your kind of understanding? Would it help if I gave a background first before we launch into how the regulations are going to affect it?
Yeah. So far that I know, like cryptocurrency is like a decentralized currency, and then it's built upon the using the blockchain technology to build upon it.
Yeah, so essentially, cryptocurrency, you're right, you're absolutely right. It is a virtual currency. Blockchain is the mechanism in which this currency is transferred. Or the way I like to think about it is it's like having a big ledger or a big book of transactions. When somebody wants to move something from A to B, that gets added to the book of transactions. And when the book of transactions is full, then you close the book and you move on to the next book, and that book gets stored into a library in a chronological order. So essentially, the system can only move forwards. You can't move backwards and amend anything that's previously gone on in the book. And this library essentially it's not stored locally in any one person's computer or anyone. It's kind of distributed across a global network, so anybody can access the library and anybody can look in any book and have a look at the transactions that are going on in any ledger. So you've got this kind of distributed ledger. A lot of people will talk and know about Bitcoin because Bitcoin's where it kind of all originated from. So back in 2009, Bitcoin was the first cryptocurrency to be created by a chap called Satoshi Nakamoto, who to this day nobody still knows the true identity of. And the reason I'm talking about Bitcoin is because that was kind of the first generation, and that was the blueprint for the technology which has subsequently evolved into all the cryptocurrencies that we know today. So over time, people kind of started to recognize that, okay, we've got this fantastic new technology. However, there are one or two inefficiencies. There are maybe some things that could be better for different particular use cases. And therefore you had this kind of evolution of generation 2, generation 3 iterations of it. So nowadays we have a whole market. Bitcoin is still really important because it drives the market. The total market cap of the cryptocurrency market at the moment is about $3.5 trillion, and Bitcoin makes up about 1.9 trillion of that. So, we're talking over 50-60% dominance, they call it. And Bitcoin still really kind of drives the price. So when the Bitcoin price moves up and down, all the rest of the currencies tend to follow it up or down with it. Sometimes there's a bit of a lag, but generally you have this kind of cyclical nature of when Bitcoin goes up, everything else gets dragged up with it. One of the things to be really aware of, and one of the reasons why it's really prominent at the moment, is that within the Bitcoin protocol, there's what we call a halving cycle. So the operators of the network, the miners, we call them, who are the ones that are validating the transactions. They're the ones that are building these books of transactions, these ledgers, and they're kind of operating the network. And they'll get paid for the work that they do by receiving distributions of Bitcoins as a payout. Now, every 4 years, the amount of payout that they get is cut in half. So when the ledger first launched in 2009, they were getting paid 50 Bitcoin per book that they basically create. Every 4 years that gets cut in half. So around about 2012, it was cut down to 25 Bitcoin. And then 2016, it was down to 12 and a half. So this kind of halving, if you like, it creates scarcity. So there is a fixed amount of Bitcoin that will ever be created. It's capped at 21 million. And that's been kind of controlled by the fact that you've only got a diminishing number of new Bitcoins being released into the market every time a block gets created. So that's kind of one of the reasons why you have this deflationary effect that is almost a hedge against inflation, because you've got this scarcity created. So people will often refer to Bitcoin as a bit of a digital gold in that sense. So the reason why that's really important right now is that the price of Bitcoin, due to the supply and demand dynamics, because there is a continually diminishing amount of Bitcoin that's being created, you have this imbalance of supply and demand. So every 4 years, in the time leading up to and just after the halving event, you have this massive increase in price in Bitcoin, and then the halving event will come, price will significantly rise, and then it will fall off again until the next 4 year cycle starts again. And right now we are very early in the next, what we call a bull run. So we expect that the price of Bitcoin following the last halving event, which was in April, will start to run up really kind of over the next 6 to 8 months. So it's an exciting time to be in the industry. But one of the things really to kind of take note of and sit up and pay attention to is that there are some fundamental differences for this halving cycle than the one 4 years ago. You know, we're in this time now where people are really starting to understand the technology. They're starting to understand the use cases behind it. People are starting, you know, with the help of AI, as you say, people are starting to do some really interesting things with the technology behind it. They're starting to realize that actually this is pretty advanced stuff. This is pretty good stuff. So you're seeing all these use cases that are being generated around, for example, supply chain management or decentralized finance or gaming or AI, payments and settlement. That there are lots of different ways of using this technology. And as you mentioned, the kind of the US election, the other thing that's really changing at the moment is this regulatory regime that goes alongside it. So Donald Trump, as part of his campaign, he recognized this emerging technology and this growing trend of confidence and adoption of this technology. So he kind of came out early and crowned himself the crypto president. So he's already, you know, as part of his campaign, he talked about firing the head of the SEC on day one and appointing some crypto-friendly figureheads, you know, at the Treasury Department, at the regulators. You know, he wanted to kind of build this regime that was going to be more beneficial to the industry in general. You know, start pushing through some greater, more crypto-friendly policies. And to be fair, the US, that's, you know, really positive for them, but they're still slightly behind the curve. So within the EU, you've seen, the MiCA framework has already been put in place in the EU. You know, across the Middle East, across Asia, you're seeing countries have already very far down the road in terms of creating regulations for this technology and creating use cases for this technology. So the US is really kind of kept playing catch up, really. But the US has got a significant influence over the global economy. So when they do catch up, you know, it's going to be exciting. So you've got this kind of growing acknowledgement, this growing understanding of the technology. There's use cases. You've got this regulatory environment that's starting to become a bit more understanding and a bit more friendly. You throw in on top of that, you've also got a lot of financial institutions who are recognizing this technology, recognizing that the potential for growth in this asset class and in prices in terms of wealth creation, value creation. However, in terms of getting access to cryptocurrency, they recognize that it's still relatively early in terms of, you know, how many people walking down the street would know how to set up a wallet or how to buy off an exchange. So you kind of had this gap in accessibility. So a lot of these financial institutions have now started creating crypto, what we call exchange traded funds. So funds that allow kind of everyday investors through their traditional investment rails through their banks, through their investment managers, through their wealth managers, through their asset managers. They can now get exposure to the crypto prices and add it to their portfolio through the kind of the traditional methods, which we've seen kind of massive. So Bitcoin ETFs first launched in January this year, and since then we've seen kind of a huge amount of liquidity into the market, which has obviously helped the prices rise up significantly so far, and we're still very early within this cycle. The other thing that people are looking out for is this concept called tokenization. So tokenization essentially is the concept that real world assets can be represented by a token on a blockchain. So if you go out and buy a property or a piece of art or a car, rather than paying cash to a dealer, and you can be buying a token on a blockchain, and that represents your ownership of that asset, which, just from a real world assets point of view, is, just has the potential to add, again, so much more adoption, so much more liquidity into the market. If you imagine every single property that's in the UK, if that's all represented by a token on a blockchain, that's a huge amount of money that's starting to settle over this new infrastructure, as opposed to the traditional kind of payment systems and banking systems. And then you've also got the securities and derivatives markets as well. So if you buy a stock or a bond at the moment, if you go to your bank and try and buy a Google share, the bank doesn't actually hold the Google share. That they've got a custodian that they use, and the custodian goes out and buys it on an exchange, and it's kind of settled through what we call the SWIFT network. So the idea that kind of even stocks and bonds could be tokenized and moved onto ledgers. There's this growing kind of realization that everything is going to start to be tokenized and everything is going to move onto blockchains, which is really what's generating all this hype around, where this technology can go, and just how high the value of some of these coins that are targeted at these particular use cases can go as well.
Yeah, I think it's quite interesting, this insight, because when it comes to technology, US usually will be ahead of the curve, but it's kind of interesting that they are quite behind of the curve in cryptocurrency. And it's also interesting about the changing perspective of Donald Trump, because I remember 4 years ago, 4 to 8 years ago, he's a bit against the cryptocurrency, but all of a sudden he just changed to supporting the cryptocurrency.
Yeah, so I think there's a couple of factors to it. I think for the US is very politically driven, so you will have a significant influence by lobbyists in Washington. You'll have banking lobbyists who are representing the major banks, the likes of JP Morgan, Goldman Sachs, that their lobbyists would have been in the ears of politicians saying, this new technology is really bad for the industry. And, it's difficult to say for certain, but it's possible that a lot of these big incumbent banks or asset managers, that they might have been scared about disruption. So any big monopoly or, oligopoly is going to be worried about the disruption that could be caused by such an innovative new technology. So one of the theories, and I'm not the sort of person to go around with tinfoil hats on my head, but one of the theories is that the banking lobby within the US wanted to try and give the bigger banks a chance really to kind of catch up, learn the technology, understand whether they have to accept these new rails or whether they could have a chance to develop their own alternative solutions. Potentially an explanation for why they're slightly behind the curve, because they wanted to really take the time to dig and understand whether they can, whether the incumbents can do this for themselves rather than having to rely on these outsiders. Whereas I think the difference maker has been really kind of the realization that actually this technology is amazing, and there's probably no need for the likes of JP Morgan. You'll probably have read in the news that they tried to develop their own coins and they tried to develop their own infrastructure, and it was kind of this realization that, well, unless all the other banks are also going to use JP Morgan's solution, that they're probably not going to use it. It's more beneficial for the whole industry if they're all using an independent coin and no one entity owns, it's kind of the nature of decentralization. If nobody owns it, then nobody's going to be incentivized to corrupt it. We're all working for the greater good of the whole system and the whole community. And once that kind of realization set in, I think you've had this shift in mindset. So if you look at Larry Fink, who's the CEO of BlackRock, you'll see in interviews that he gives, not that long ago, only kind of 2-3 years ago, where he's talking about Bitcoin as being, really dangerous for the economy, and he calls it a pet rock, and that there's no use case, and that it's only used by terrorists. And you fast forward a year or two, and suddenly he's giving interviews where he's talking about tokenization as the next kind of the next best thing since sliced bread, and the fact that everybody's going to have all of their assets on a blockchain. So it's testament to, I guess, the himself as a CEO, that kind of he can take the time to understand and learn something and hold his hands up and say, actually, I was wrong, and I've since educated myself, and we now think this is pretty good. But yeah, it's interesting to see that kind of shift from even people like him in the industry.
Yeah, because I think, for example, like our university, they recently just opened like modules called Fintech, and then they introduced like cryptocurrency. But this is like a brand new modules compared to like a few years ago. So I feel like cryptocurrency and Fintech is start to like gaining broader exposure to the public compared to like a few years ago.
I mean, it's certainly one of the things that drew me towards the industry, and one of the reasons why, as a trading software, what we decided to go all in on crypto, because within kind of the products that we're offering to our users, you could quite easily use our software to trade foreign exchange or to trade equities, but we just saw crypto as being the most opportunity in terms of the market. And certainly when I was working at the bank, one of the biggest projects I had to deal with was putting in the payment infrastructure for this new bank within a bank. So trying to set up accounts with all of our banking intermediaries and set up all of those payment rails so that our customers could move money in and out of their accounts. That it was really clear to me that there were just so many challenges that could be solved by blockchain for the banks. And that was kind of what drew me towards that side of the industry in the first place, because I thought this is just solving a real problem, and has so much potential to revolutionize the banking industry, let alone all the other fantastic use cases that have been developed for this technology.
Yeah, I agree, because I feel like the public and or like government, they are still like discovering ways to make the cryptocurrency get into the cryptocurrency market as well.
Yeah, so interestingly, there has been a lot of work done on developing working papers and kind of this concept of a central bank digital currency. So the idea that rather than printing money, printing notes, the bank or the central banks of the governments will just start issuing digital currencies. And there's obviously a couple of challenges that you've got an aging population, which is probably going to be quite resistant to a major change like that. This sort of change might take a couple of generations to sink in until you've got kind of real generations of people that have been brought up with this technology and these concepts. Certainly I know that my grandparents still struggle with the idea of using a mobile app. They prefer cash all day.
Yeah.
So then this is one of the other interesting debating points for the US, because they have a constitution, and they are very defensive over their rights within that constitution. And when you think about blockchain technology and this kind of distributed ledger technology, it's very transparent, it's very public, anybody can see what anybody are doing within the blockchain by tracing the transactions in the ledgers. So there's a huge debate around privacy within the US, and if they start to introduce a central bank digital currency, does that mean that when I go and spend £20 in the shop, does that mean that Amazon can see that transaction and suddenly think, okay, well, I've bought a lawnmower over there, therefore they need to start sending me more advertisements for lawnmower parts and things? That's what people are worrying about, kind of the way that this technology is going to be used, which I think is probably also one of the reasons that they're behind, because they've kind of still trying to work through these arguments and debates within their political parties, let alone kind of make a decision and roll it out to the rest of the country.
Yeah,
and it's interesting to see the difference between the Republicans and the Democrats and the way that they've gone about this. I mean, in theory, AI, blockchain, all the big kind of issues like this, they should all be bipartisan issues, and they're going to affect everybody. And it's just interesting that it was the Biden administration, the Democrats that were kind of very supportive of the banks and the businesses, whereas the Republicans are generally very kind of supportive of the American dream, and they want to see people, the capitalism market. They want to see people building their own businesses, and they want to distribute wealth. And it's naturally, you would think that blockchain would kind of support a Republican regime more than a Democrat regime. But it's interesting to see how it's playing out with Trump being the pro-crypto candidate, and Harris wasn't against it. I mean, she's from Silicon Valley herself. I'm sure she would have been very supportive of the technology longer term. But what we will see with Trump, and particularly because he's won by a landslide, he controls the Senate, he controls the House. He'll be able to move very quickly and bringing some of these policies to life. So we'll probably see the same regime change. It will just happen a lot quicker under Trump than it may have done under Harris.
Yeah. For example, like Trump's son, he just like launched a new cryptocurrency company. So I feel like there's like a bright future in US for the cryptocurrency.
Yeah, and interestingly, there's a record with this recent election. There was a record number of donations raised through cryptocurrencies. I think it was in the end about $250 million worth of donations, via crypto for both candidates, not just for Trump. But yeah, you're right. Trump did issue his own coin in the end.
Yeah. It's kind of crazy to see these changes in US. So maybe do you have any advice to like young investor to navigate this kind of like fluctuation in the market, cryptocurrency market right now?
Yeah, so the one piece of advice that I would give people is to really, we talked a lot about this 4-year cycle, the halving cycle. So the one piece of advice for anybody that's looking to start investing is to understand this kind of cyclical nature and understand where we are within the 4-year cycle. As a wealth manager, working for the bank, my advice to our investors at the bank would have been, it's time in the market and not time to market, which is never more apparent than in the stock market, because you've kind of got perpetually rising stock markets. If you take a step back and look at the long-term view of the stock markets, they're still massively up now from where they were 10, 20, 30 years ago. It's kind of, you've got that long-term growth in there, whereas because the cryptocurrency will follow a similar long-term growth, but you will have this 4-year cycle, and there will be up periods and there will be down periods. And I think anybody that understands that cycle can time it fairly well and start making some decent money alongside of it. And the other thing I'd say is, it's one thing that's really important with trading cryptocurrencies is managing emotions, controlling emotions, trading without emotion, because it's very exciting when the prices start going up, when they start going up very significantly and very quickly. But what you will also see is there is a lot of volatility. So although the prices might shoot up, they will also crash back down very quickly as well. So, it's just as easily as you could, make 50, 60, 70, double your money, within a week or two. Within a day, it could come back down another 20, 30, 40%. And a lot of people will kind of panic at that point. They may, sell out when the market's down, and you can kind of tie yourself up in knots, and you can lose out on real value just by not having a clear head when you're trading. And that's really one of the benefits of our software, is that because you're automating that trading process, you're building a strategy that's going to trade by itself. You're kind of removing human error and emotions out of the process.
Yeah, I think maybe like this advice could apply to like investor who does not invest in cryptocurrency as well. Like you have to keep a really calm emotion without like really having a emotion fluctuation whenever you see like a loss or like a gain.
Yeah, And it's been interesting to come into the cryptocurrency space with a wealth management background, because I always thought from a wealth management point of view, I always thought I was a very risk tolerant person. I always thought that I was kind of quite accepting of taking risk within my own personal investment strategies. And then you get into the crypto world and you start comparing yourself to some of these cowboys that have been riding these away for years, and you think, actually, compared to these guys, I'm actually quite conservative. Yeah, it's certainly been, and particularly when you think about the meme coin markets. So, meme coins are what we call non-fungible tokens. So that they are essentially tokens that don't have any real value other than the meme behind them, the joke. So these coins are very easy to issue. Anybody can issue them. I've issued one just for fun, but they tend to, just as quickly as memes get popular and die out within social media. Think TikToks, think Instagrams. These coins essentially will ride the wave of the big memes. So you think the Huck Tour video, as soon as that got released, within a week somebody had released a meme coin with a Huck Tour logo across it, and suddenly people were going crazy trying to buy it, and within a week the price had completely crashed to zero. The challenge with the meme coins is you can make thousands and thousands of percent in a single trade, and you have people literally becoming overnight millionaires. And this kind of thing would happen maybe once in every 1,000, 5,000, 10,000 investments you make. And because people are still chasing that dream, you've got this kind of people are throwing dumb money away because they're hoping that they're going to be making a bet on the next the next 10,000x meme coin. So you get a lot of people who are taking advantage of that. So it's a very volatile market because people are just preying on those that are trying to buy lottery tickets, really.
I do have a question. How long did it take you to learn how to trade? So students are kind of aware that it's not an overnight kind of process and you become an expert.
So I have the benefit of the experience with the bank. So I did while I was working for the bank, I did a series of exams and qualifications that kind of helped me in the trading space. It took me a good few months to kind of really get under the grips of the cryptocurrency market and kind of transfer those skills across, particularly when it came to algorithmic trading, because you weren't transitioning from my understanding of executing trades on behalf of a customer to, okay, now I'm executing this on behalf of myself and I'm actually the one making the decisions and kind of reading the indicators, and then applying the lens of, okay, well, how do we automate this, and how does the infrastructure actually work behind an automated version of this? So that kind of journey for me is taken a good 4 to 6 months, from when I left the bank to when I really felt confident in this software that I use. Our internship program that we run, it's a 12-week program. The guys, we give them probably a 2-hour session a week, and then they do their own self-learning in between. And this is our first cohort. We're probably about 7 weeks into it, and I think I'm pretty confident that these guys are capable of creating some really good trading strategies. So you think that's probably 12 or 14 hours worth of work. So if you use the right resources and if you get the right information from the right places, then it is something that can be quite easily learned. And we try and make as many resources available as we can for people. You're right, it's not something that's going to be learned kind of overnight or in one session, but if that there are enough resources, and there are enough free resources out there for people as well. So you'll see a lot of people that will try and sell you trading courses or sell you signals, or say, join my Telegram group, pay me so many pounds a month and I'll tell you when to buy and when to sell. That there's absolutely no need to be paying for this. There's enough free information out there. There's enough free resources out there. And we are one example of a firm that tries to spread the knowledge. And for us, I think that the benefit for it is that the more, we're happy to give this information and this content away for free, because it's going to benefit us at the end of the day if people start using our platform. So there's and a lot of firms out there will recognize that and take the same approach. So there's enough free information out there that you don't need to go and pay somebody for a trading course.
Yeah, I agree. So what advice would you give to university students on how to bring cryptocurrency into like industry they are passionate about?
So if somebody is interested in learning more, getting involved in it, I think first of all, I'd advise them to really kind of take a step back and think about this technology can be used by so many different industries in so many different ways. If somebody's really passionate about learning about it, then there's enough information out there. I'm happy to share my resources. I'm happy to share some of the resources that I used, a few of the textbooks that I read when I was really kind of learning about this. It's interesting kind of to have a conversation with somebody who says, I want to start working in crypto, or I want to start working in blockchain. It's almost because everybody is going to be using it. It's like saying, I want to work with AI. I'd take a step back and think about the fact that all companies are going to be using this technology in one way or another. So it's not that somebody would go and work in AI. It's, how can they bring AI to all the other industries that they might go and work in? I'd suggest that they think about really kind of what interests them and what industry they want to go and work in, and then how can they bring blockchain to that industry, or how can they think about the use cases in that sense? Because there's still so many untapped use cases out there, that things that can be done with this technology that people haven't even thought of yet.
Yeah, for example, like for university student, the university they have paid for like the Financial Times, so we got like free access to the Financial Times. So I think is that there's like a lot of like free resources for university student to get access to a lot of stuff.
There's an interesting fact out there that the longest running blockchain in existence is actually the New York Times crossword puzzle.
Oh, really?
They used in the way that they create their puzzle and they hash the results. It's in terms of the methodology that they use to check whether the results are right. So the crossword it's a bit like a Sudoku. It's very difficult to solve, but once it's solved, it's very easy to check. And they use that same kind of hashing mechanism in the New York Times crossword puzzle. And because the newspaper is time-stamped and dated, goes out every single day, you've got a consistent chain of this hashing going on, and therefore technically it is a blockchain and the longest running blockchain ever.
But thank you, Ben, for joining us today, for the amazing insights that you have given to us.
Yeah, hopefully it's been helpful. Yeah, thank you very much for having me. And
yeah,
as I say, if anybody's interested in learning more, I'm sure we can share some of the materials and some of my YouTube channel. If anybody wants to watch a bit more, learn a bit more, yeah, but it's completely free to use our software if people are interested in taking a look, having a see if they can build some trading strategies. There are plenty of resources available on the website as well.
That would be amazing. Thank you.
Perfect. Yeah, thank you so much.
yeah, thank you.